people are always asking me, hey, when are the institutions coming? So the institutions finally came, and they're on chain now. But for various reasons, they would put their assets on chain, and then nothing would happen to it. So we call it, tokenization theater, where you tokenize something, you put it on the blockchain, and you don't use the blockchain. The vision of Theo was to literally start at that point, saying, tokenization is done, right? We are going to figure out exactly what it takes to build volumes, to build real liquidity, to make those assets composable in DeFi. We're going to put all the building blocks together, and we're only going to focus on that, both in terms of technology and capital. So cryptocurrency is a nice $4 trillion industry, but the really big opportunity is the $1.5 quadrillion industry. It's sort of a bad term, but it becomes standard real world assets that's sitting out there. And so the really big opportunity is to rewire the financial system on these blockchain rails. And that applies both to investing and trading, as well as payments and a few other things.
Well, welcome to Deal Flow Podcast, Iggy. It's an absolute pleasure to sit down with you today and talk with you about all things that you have been building, your history, and how you are bringing on-chain capital into global financial markets. I've done my research. I've got my notes here ready to ask you all sorts of different questions, and I'm really excited to chat today because it seems like you have gone from Wall Street to venture capital to managing hedge funds. You've touched everything within the finance sector, and now in the leading seat of one of the most innovative Web3 projects to date. So thank you so much for sitting down with me today.
Oh, thanks for having me. Excited to dive in.
Cool. Well, I guess let's just start at the beginning. Theo Network. So the crowd here for Deal Flow typically aren't super crypto native, and I had not heard of Theo Network before diving into doing a little bit of research myself, and it really blew my mind, and it was very easy to get excited around what you're doing because at Theo Network, you guys are making one of the biggest financial bridges, bridging the decentralized finance world with the traditional finance world. So if there's anybody out there who is not a crypto native person here, Iggy, are you able to tell them why they should pay attention to Theo Network?
Yeah, so I think there's so if we roll back all the way outside of crypto, the big picture is that you have 4 trillion or so of crypto assets, like the cryptocurrencies. That's sort of the boomer term that people use, and they are mostly cryptocurrencies like Bitcoin, Ethereum. But these cryptocurrencies sit on blockchain rails, and these rails are much more efficient, and the trustless. There's like a million benefits we can get into, compared to like the TradFi or traditional finance system. That a lot of that was built in the 50s and 60s on mainframes using COBOL, the programming language that's like super old and super old system. The Fedwire system was originally created in 1918 and then sort of upgraded over the decades. So the reason the systems are so old is because obviously there's traditional institutions there sitting on tens of trillions of assets. So by nature they have to be conservative. They have to change very, very, very slowly. But as a result, so while a lot of the other industries have moved on to like modern tech, and they're sitting on this like super old rails. So so cryptocurrency is a nice $4 trillion industry, but the really big opportunity is the $1.5 quadrillion industry. That's the what it's sort of a bad term, but it becomes standard real world assets, or basically the non-crypto assets, if you will, equities, real assets, debts, bonds, loans, and all that stuff that's sitting out there. And so the really big opportunity is to rewire the financial system on these blockchain rails, and that applies both to investing and trading, as well as payments and a few other things. So I say that's why people should care about blockchains and crypto in general. And crypto has been very useful in terms of testing those rails, right? So if you look at, I think, I have to fact check that, but I think 5 years ago, the number of transactions per second in all of blockchains was like a few dozen transactions per second. Now it's like 3 or 4 orders of magnitude higher. So it's just sort of a night and day in terms of how far technology has advanced. And that's why, even though like people have been talking about this opportunity for a long time, but the building blocks are only in place now. So maybe I'll pause now and I'll let you know. I'd rather always have like a dialogue and back and forth than monologue.
Yeah, no, I'm very excited around what you're doing. I believe as well, like I'm a fundamentalist on blockchain technology. The technology is just fundamentally better than what of the archaic systems that the finance systems of the world have been using. Instant settlement, global payments, no borders between all of the transactions, and everybody has been building a lot of this technology for the past 4 years. And I believe like right now is actually the stage where the technology is coming out of the test net and it's actually in the mainnet areas where we can actually start to use these technologies, which will allow decentralized finance to actually compete on the world stage with traditional finance. And I know that you have a lot of experience in the Web3 space there as the head of global investments there at Polygon Ventures. So I know that you've seen so many different projects come across your plate. So how did you go from venture capital and all this traditional finance world and transition into becoming the chief investment officer at Theo? That is a pretty impressive title, chief investment officer. How do you decide what to invest into? Like, tell me about this little roadmap.
Yes. So the reason there is a chief investment officer here at all is because at Theo, our mission is to give the on-chain capital access to the world's financial system, especially the world's greatest wealth creation engine, which is the U.S. financial markets, stocks, bonds, even private assets and commodities that trade super efficiently and widely accessible to U.S. Investors, especially like wealthier investors that have the minimums and they have the minimum tickets and the minimum to open accounts and all that stuff. So the goal is to make these sort of essential financial assets available around the world. So that first vision that I painted earlier, which is for blockchain as a whole, like my personal mission is to bridge right there the traditional Wall Street TradFi, as we call it, and crypto, and that's Theo's mission as well. So that's why we're like totally aligned on that. And when I was co-head of Polygon Ventures, we were seeing deal flow in all aspects. We're seeing almost every deal that was like hot in crypto for the entire time. And, from infrastructure to zero knowledge and fully holomorphic encryption and games and everything in between. And I was always trying to do more in the RWA or this kind of a real world asset space. But most of the projects that were lacking sort of the essential elements. So where you had the space, so there's like very, very briefly, like the RWA space, like I think of it as 3 phases. First phase was like 17, 18, following the ICO boom in 17. There was kind of a STO, security token offering boom in 2018. And there it was a lot of adverse selection. So any kind of asset that the rest of the world didn't want to buy, people would stick it on chain and say, "Oh, this like stupid Bitcoin people, they just have a bunch of found money and they're going to buy anything because it's like funny money anyway." And so you would have like portfolio of invoices, but you have no idea what kind of businesses are behind those invoices, and there's no disclosure, or some like random building in like Florida, and you don't know who's going to like collect the rent. So we're just like really poor quality assets. It turns out that crypto people are actually really smart, and so they didn't buy them, and that wave fizzed out. The second wave was actually very legitimate, and actually my former colleagues in Polygon and Avalanche, were kind of the forefront of that, which is taking the blue chip trillion-dollar institutions and taking some of their best assets and putting that on chain. So that was, the deals you read about with Hamilton Lane, KKR, Franklin Templeton, BlackRock, and all that. So they would take their money market funds, private credit funds, tokenize them, and put them on chain. And that took a few years for them to get comfortable. I apologize, I have a cold, so a quick. Um, excited to talk about it. I just want to make sure my vocal cords keep up.
No, you're
So
all
that
good.
was the second phase. And the second phase, again, it was very grateful for the institution that took the leap. It took a while. People always asking me, hey, when are the institutions coming? So the institutions finally came, and they're on chain now. But for various reasons, they would put their assets on chain, and then nothing would happen to it. So we call it, tokenization theater, where you tokenize something, you put it on the blockchain, and you don't use the blockchain. So it's not composable in DeFi. It does a trade. There's no price discovery. You sort of issue a press release. You announce TVL, total value locked. You say, well, we have this like X amount of assets. But then, this kind of all these wonderful technologies like DeFi, for example, that were developed over the recent years, you don't apply them to these real world tokens. So the vision of Theo was to literally start at that point. Saying, tokenization is done, right? We are going to figure out exactly what it takes to build volumes, to build real liquidity, to make those assets composable in DeFi. We're going to put all the building blocks together, and we're only going to focus on that, both in terms of technology and capital. So when I saw that vision, I knew right away that I was aligned, with what I wanted to do, which is like the phase three, to take all those assets and actually make them useful on chain. And then the founders of Theo, I've known them for almost 2 years now. They were building they were building a chain, an EVM chain at the time. So that was even before they started Theo. Met them when I was at Polygon Ventures. So I've been observing the journey of Theo and the idea formation from the early days, and then I became an advisor first and an investor, and then now that there is a product market fit and it's scaling rapidly, then I jumped in full time to help scale.
Yeah, I hear what you're saying there. And tokenization of real world assets has been a bit of a hot subject for the past couple of years. I know that when I've been going to conferences, everybody seems to be coming to me, hey, Kira, we're putting real estate on chain. Hey, Kira, we're putting watches on chain. Hey, Kira, we're putting this on chain. I'm like, what? Everything seems to be going on chain. And when I was researching around Theo, you guys, what Theo is doing is you're putting in that missing piece of the puzzle, because actually allowing people to, yes, you can put your real estate or your treasury bonds or treasury bills, on chain. But the problem that has existed at the moment is you actually can't do anything with that. They might be on chain and sit there, but what Theo is doing is giving that little piece of the puzzle that allows these assets to become liquid and tradable and more usable. And that's what I kind of took away from it, which made me very excited, because there's all of this capital. And I think that crypto native people are interested in investment and may have even started off in traditional investment, but the worlds have been so separate. You've had traditional finance, and maybe you might have gone to, say, Robinhood or a little trading platform like that, but it's always been so separate from the crypto world. So it's really excited to be unlocking the two very seamlessly. I know there's a lot of people who have a little bit of crypto, or maybe even their stable coins, and to be able to now I guess, like transition some of their assets or their wealth into traditional stocks or like gold and treasury bills that you guys are doing there. I think it's going to be really exciting for a lot of people. But I want to know from you, like, I know when I read about you on your LinkedIn profile, you said you're very much a facts person. The facts speak louder than anything else. And I want to know as well, like, what did you see, or what do you see in real world assets, and what is the data behind this that makes you so bullish on wanting to double down specifically on creating this bridge between traditional finance and decentralized finance worlds?
Yeah. So the biggest thing is something that's a huge narrative now, is the stable coins, right? So that's over 300 billion, growing rapidly, and even Scott Besson, our Treasury Secretary, has forecasted, I think it was 2 to 3 trillion, 1 to 3 trillion. There's a bunch of other Citigroup. There's some forecasts that are even much higher than that, but 1 to 3 trillion is sort of an order of magnitude increase, right? Well, 3 trillion would be an order of magnitude increase. So that's a 10x on where we're at today, and even 300 billion, which is kind of a modest percentage of the global financial system, a very modest percentage of like the global M2. If you look at the volume, there's like 40 trillion, 40 to 50 trillion of annualized volume of stable coins. If you take out the pure trading, and look at the more meaningful transactions, like putting things into DeFi, payments and stuff like that, you're still left with 10 trillion, which is larger than some of the biggest payment networks like Visa and Mastercard. So the stable coins have this like massive product market fit, not only for trading in DeFi and it's kind of the collateral and the denominator for various like crypto trades, but also for payments. Again, that applies more in the emerging markets. When we are, well, you're in emerging market now, from what I understand. So in a lot of the countries you walk around, like some of the stable coins are a household name, and you can
Mm-hmm.
compare it to Western Union, which is a massive ripoff, and even some PayPal and a lot of the traditional services, they charge you a lot to send money, especially crossing borders, right? So a lot of that product market fit was outside the U.S., and of course it's a great deal for the U.S. So U.S. like erroneously was not supporting it, but now they're like fully behind because obviously U.S. has a lot of debt, and what do stablecoins do? They buy T-bills. So if that goes for 3 trillion, that's actually quite a meaningful chunk. So it's like you're literally like rummaging in your couch cushions and you find like a bunch of $100 bills. So so there's a lot of, obviously that's why the Genius bill had passed with the stablecoin support, and so the U.S. is fully behind it. There's a lot of hundreds of billions. There's even more volume, which means real usage. So our like first product, TBillYield, is basically strictly better in a sort of mathematical sense than stablecoin because you can do everything you can with like a USDC or USDT, but it also gives you a risk-free rate, which is now about 3.8% after the recent Fed cut. So you should never use stablecoin, but gives you nothing. You should always use a product like ours or something similar, which is a money market fund on chain. That's just a really, really basic building block. So in terms of your question, like what data do we see? It's like, well, we have stable coins that are massively already adopted in the present, and then you have a product that's that's strictly better. And the advantage is not just that it gives you the excess 3.8, but once you supplement it. So for example, now if you buy TBillYield, you also get points, and these points are convertible into a future token. So again, I'm not providing any forward guidance, but it's quite likely that we're going to have a token in the next 2 to 4 months. Uh, and on protocols like Pendle, where you can tokenize yield, essentially what it does is it assigns a value to these tokens. So you can either get this risk-free rate, 3.8% plus points that become Theo tokens in the future, or you can just get USDC. You can basically get a guaranteed rate. And right now, that's between 15 and 16%. So
That's
the market is
impressive.
assigning very, very serious. Yeah, that's pretty wild. So the market is assigning a very serious value to what we're building already. I'm not saying
Mhm.
you get this much in Theo tokens or Theo points. You literally get that much in money today. So
What
and
do
then
you
the
think?
only risk.
Sorry, I was just gonna say, like,
Go
what do
ahead.
you think,
Yeah.
like, opening up the access, unlocking global access to, say, US Treasury bills to the world, like, in these emerging markets, what do you think that's going to do to that market? Is it going to uh, yeah, I'm not too sure. I just think that there's is unlocking a market that has been so um, restricted from everyday people, and now you're saying that myself, I can get access to these yielding assets with only $1. Like, what do you think that is going to do to these new markets, like existing markets, with a new level of accessibility, allowing to tap into them?
Yeah, I think it's actually like kind of it makes me feel good about working here because a lot of people say, oh, crypto is like, it's for criminal, drug dealers, fraudsters, whatever. But the reality is it's like so there's like 8 billion people in the world and 1 billion of them or less live in developed markets where you have, nice brokerage accounts and people are, but even to open that account, you still have a minimum. But people who live in those countries in general, they probably have $1,000 or 5,000 minimum. But even in those markets, by the way, so like, I have this like private banking account and you get access to a whole bunch of stuff that a retail broker wouldn't give you. And these things have minimums, 100,000, sometimes 500,000 just to invest in one opportunity. So
Mm.
there is definitely, the minimums are a huge thing. And if you go, the remaining 7 billion people that live outside of those developed markets, it's actually really, really hard to get access to risk-free rate. It was hard to get access to a dollar, right? Back in the day, and I'm sure this is still a bigger opportunity. It's a bigger probably TVL, for lack of a better word. You just cash stuffed under the mattress in emerging countries. That, my guess, is probably still larger than 300 billion in stablecoins, right? So we're
Yeah,
slowly, right. And that obviously gives you no yield, and people could come and perform what's known as a wrench attack, where you take a wrench and you get hit repeatedly over the head until you show them where your cash is hidden. So that's no way to like build wealth or build savings, right? So stable coins are a nice step forward. Now you can earn a risk-free rate. The next product we're going to bring out, they're not going to be risk-free, but they're going to have higher upside, like tokenized gold, tokenized stocks. They're still very high quality, sort of blue chip type, well-established opportunities. But again, outside of the US, not so easy to buy gold. You either have to have a big minimum, you have to pay a large transaction fee and a large management fee. So you're kind of getting ripped off. And the fourth thing, there's also slippage in the way they execute the gold. Let's say if you're rolling a different futures. So to have gold on chain, not only have like in our case it's not minimum. Many other like protocols still have minimums and they have a lot of paperwork you have to fill out. In our case, we're available, not available in the US, just out of abundance of caution, even though clearly the way like the U.S. regulatory, and legislative environment is very favorable. Just to be really sure, we're waiting for like the full legislation to be passed. That's the next act that already passed by Congress, now waiting Senate. So but it's available in like over we already so our like THBL, we have customers in over 60 countries, for example.
wow,
So
that's
it
important. That's
really is
impressive.
Yeah, it's pretty crazy. So it really is democratizing access to these financial products. Like, why should only the U.S. investors, right? So U.S. Tech industry, like U.S. financial markets, are like super dominant around the world, and the rest of the world wants access to that. And then, of course, in the medium term, we'll bring other maybe some European or Japanese investment opportunities, ultimately emerging markets too. But for now, like that's obviously like the biggest one. So I think it's going to be very exciting to allow people to, starting with just a few dollars to save for their parents' old age, right? To, save for their kids' education, save for a rainy day with just a few dollars, and be able to invest in T-bills and gold and stocks and like the proper thing. And, as a chief investment officer, ultimately, when you have enough assets, you can build a proper diversified portfolio on chain the same way that like my like overpriced private wealth manager is building it for me, right? You'll be able to do it on chain at literally negligible cost, like on the order of a basis point, and starting with investing with relatively small amounts. No,
I
not
think
relatively
that
small. Like you said,
awesome.
with
That's
one
so
dollar,
exciting.
1 cent
That's
if
so
you want.
exciting.
Yeah.
Once then, like you can get started with nothing. I know that in the pipeline in the coming weeks, I think that Theo is launching their tokenized access to gold. My question to you: so gold is one of the prettiest charts of all time, right? It's just it's always looking good at the moment. And I want to know from you, as chief investment officer, why do you think gold, solid bricks of gold, is a fundamental that everybody sorts of is still coming back to, still banking on? Like, what's so good about the gold asset?
Yeah. So actually, I'm trying to look. I found a chart recently, which was super surprising even to me. So there's like various previous peaks in gold price. If you look at really far away, because gold hasn't done well in quite a while. The previous peak was in 81, 1948, 32, 1921, and now we're in 2025. If you look at the gold and gold miners as a percent of total global assets, it ranged between 20 and 30%. And right
Wow.
now, even with the seemingly massive run up that gold had, it's only 4%. So I don't know fundamentally. I have to think more about it if we'll get to those levels. But clearly, given the reasons that gold is going up, which is like kind of a global instability, money printing, and all that stuff, these are the same reasons that gold did well in those other cycles. So there's not much fundamentally different compared to then and now. And in fact, you could actually argue there is more borrowing and more debt, especially on the part of various governments, not just the U.S. So in those terms, there's still fundamentally a lot of upside to gold. And Bitcoin, right, was at first it was meant to be like digital money and like way of payment, and then once it became worth trillion, people said, I'm not going to pay with that. I'm going to HODL it. So Bitcoin over time became digital gold, right?
Mm-hmm.
So now gold wants its rightful place back as digital gold, right? It's kind of like the that Seinfeld joke where gold called it wants digital gold back.
Right.
So
I don't
it's
know
it's
this one, but yeah. But yeah, it's interesting how they say, yeah, Bitcoin is the new digital gold. And even, I mean, even when I'm talking with people at conferences, just understand the traditional assets are now getting compared against these digital assets. And what you guys are doing there with Theo is sort of bridging the both of them and giving people the opportunity to explore these new assets. And so, because they're massive, massive markets which have been very much inaccessible to most people, and you guys are removing all of that. So, I want to know from you as the investment officer, like, should everything be brought on chain? Because there's a big debate around whether it is just a theater of investments or there's actually value on bringing things on chain. So at the moment, you have currently got your treasury bills on chain, looking to bring gold on chain. I've heard from other conversations that you might have had in previous with other people about looking at bringing different tech stocks on chain and unlocking that. So, should everything be on chain? Like, how do you make your decision on what asset class you guys are going to be looking to bring on chain for the Theo network?
Yeah, it's been many years thinking about it, and sort of this framework of the three phases is helpful here too, right? So the first phase, which is like low quality assets, adverse selection, like so we shouldn't bring that on chain because what's the point? Nobody's going to buy it anyway. The second phase was less clear. It took me a couple of years to realize that is high quality assets that don't inherently trade, like private equity, private credit funds, private stocks. People talking, there's like all this hype about OpenAI and SpaceX and bringing that to OpenAI, but it's going public. But the large unicorns and decacorns. But so the reality is, if you bring them, so part of the reason for tokenization theater, where you tokenize things and nothing happens, a lot of that is kind of institutional culture. A lot of that is regulation, fear of sort of SEC under the previous era, just being general cautiousness, lack of on-chain like crypto nativeness of like knowing where liquidity lives and how to actually build liquidity. There's like a bunch of reasons there, but a lot of that, one of the reasons is also these assets just inherently don't trade, right? So there's a reason private equity remains private is they don't want these to trade too much because they want to have a window with which to build value. My first job was at Bain Capital. I was working on leverage buyouts, and I'm somewhat less leveraged buyouts. So the whole point of private equity is you buy the company, you have a window to build value, to whether grow revenue, cut costs, improve ROI. So they don't necessarily want that stuff to trade. OpenAI doesn't want their stock to trade until they properly go public. So after a while, like I realized that the best opportunity for on-chain is to start with assets that already have liquid markets in the TradFi world. So that's why TBill's gold and the kind of a Mag 7 type stocks, crypto stocks, particularly interesting like Coinbase and Robinhood. Those are the biggest opportunities. Other commodities potentially being out silver, then branching out to another 10 or 20 stocks. Those would be the first in the pipeline.
Mm-hmm.
And then, eventually you can go into the less liquid things. But the beauty of those is that you can bootstrap the liquidity on chain by leveraging the massive liquidity that already exists in the off-chain world.
Are you able to go into a little bit more detail around the mechanics of Theo? So, how do you? I saw a graph yesterday when I was looking at it. It was called the it was talking about is it optimism? Wait, I've got the notes here. Sorry, it was called it's the way that you bringing things on chain where you can guarantee the price because Theo has like creates this liquidity through the trading strategy, right? You're able to dive deeper a little bit further into that. It's called optimized minting, I think it was.
Yeah, no,
Right.
so I think that so no, I think this is actually super great question because you're getting at the like how do we actually get those things to trade? Because
Yeah.
everybody agrees that there's tokenization theater going on. Everybody knows that we need volumes, we need composability, but basically like nobody has really achieved it. So um, and by the way, just to make sure that uh, we have credibility to speak about it, in terms of the velocity, we're by far number one RWA protocol in all of crypto. And velocity is the trading volume divided by TVL. So right now we haven't been like aggressively like growing TVL. I haven't been like marketing a lot. That's all to come later. And we still reached within a couple of months of launching 175 million of TVL. But that's still less than some other RWA protocols. I mean, they have a few billion here and there. But if you look at, right, so with the exception of a tokenized gold, right, so let's setting that aside like Pasos gold and Tether gold, if you look at the traditional tokenization protocols that do stocks and money market funds and private credit, private equity, those kinds of things that institutionally focused RWA chains. Um, if you look at our trading volume, it's between 10 and $20 million a day already. And that's just a money market fund, right? Money market fund is not even something you need to trade all that much because it doesn't move. It's a risk-free rate. So once we launch tokenized gold and tokenized, Mach 7 type stocks, we expect that to grow much higher. Our TVL is also going to grow much higher. So with a combination of high velocity, high TVL, we're on track to be number one RWA protocol by volume. And that's what we want to be. We don't want to be the highest by TVL and just sit on the massive TVL, do nothing with it, and like issue a press release. We want our stuff to actually be used. And even our revenue model for like the future tokenomics, basically the primary and only revenue source is sharing trading fees with the exchanges. So if our stuff doesn't trade, our tokens don't make money, we don't make money. So our North Star is sort of very aligned there.
How I was
So
say
in,
build
even
on
even with even so, yes, sorry, go ahead.
no, I was gonna say to build on that. So like are you building in an economy within Theo Network to like be able to earn from the assets, give back to the community and sort of like perpetuate yourself there to build out that trading velocity, right?
Yeah, no, there definitely is a virtuous cycle there. So how we do it, maybe so I wanted to kind of establish credibility that we really have the right to speak about building those markets because we already have a result, right? So just with a test product, right? The money market fund is really a test product. There's nothing ultimately special about it. There are other money market funds on chain. So it's not tokenizing money market funds. That's the big deal here. It's actually getting it useful in DeFi and getting it to trade. So the fact that volume, even with the current volume, with TVL that we haven't marketed, and with just a money market fund that shouldn't even trade all that much, just by absolute trading volume, we are already like number two or three in all of our WA. There's people that have billions of TVL. We're number one by far by velocity, and we're tracked to be number one by volume. So we don't just talk about building this stuff, but we actually do it. So what it takes to build it at the
Mm.
foundation, you need to have really high quality products. So for our money market fund, we're partnered with Standard Chartered and Wellington, which are both 100-year-old global institutions worth hundreds of billions, trillions. So really, really blue chip AAA type issuers. So you go to have top product, but there's no doubt that the underlying assets are there and then they're high quality. Then you have the tokenization. We actually partner with Standard Chartered's Libera on that. Again, you need to have sort of reputable tokenization provider. But then the interesting parts begin is connecting to the venue. So we are very Hyperliquid aligned. So knowing how to work within Hyperliquid ecosystem, knowing how to create this HIP1 spot market on Hyperliquid, how to drive volume there. That's step one. Now there's been explosion in other perp dexes, so we're working with all of them also to bring our products there. So for a lot of these institutions, this is relatively advanced knowledge of on-chain stuff. Like they kind of know that perps are big, but they don't necessarily know how to work within that system. Then we create spot and perp markets at the same time, and then we'll run the funding rate arb between them. So having the perps usually trade 5 to 10 times more than spot when they exist. So the perp market derives liquidity for the spot, especially when you're running the arb between them. So that can spin up a huge amount of volume right away. Then, so having the perps and the spot, running the funding arb, being at every perp dex, not just one. We're also going to have our own perp dex using HIP3, which recently launched. This is the Hyperliquid protocol, a firm proposal that allows you to have your own perp dex. So we're going to have that. So connecting to the venues where liquidity lives, knowing where liquidity is and knowing how to do it correctly is number one. Then being market makers, right? So running the funding rate are making markets ourselves. So our founders have background in high-speed market making. So if there's one thing they know, is how to build the best market making algorithm. So having this proprietary technology and then having capital to run this market making. So we have separate vaults that where people put in and they're earning yield. In exchange, that capital is used to build those markets. And then connections with external market makers. Why only use our own technology on capital among our investors? So we raised 20 million, by the way. A lot of our investors were market making firms, some of the leading ones in crypto. So we have strong relationships with them. Connection with those market makers, giving them fast and cheap mint redeem so they can provide their own capital, their own expertise. That builds even more liquidity. And I would say like those are the primary aspects. And then also having multiple assets allows you to dynamically move liquidity between them. So once we have more assets, it's actually going to be synergistic amongst all of them. So that's the how. And then the result is what I actually started with, which is having real volumes. And by the way, with TBillYield, again, it's just a money market fund, nothing special. But when we launched within 8 days, it was on 4 chains and 15 different DEXs and DeFi protocols.
Wow.
So that's very compelling. Even when I was at Polygon, it would take us a few months just to launch on one chain
Yeah,
because
it's
of
getting
the institutional barriers and all this stuff. So like when it comes to like building on chain, the Theo team is like quite good. I mean, it's like there um, there are a few crypto native teams in RWA. Most of them are not crypto native, but I think it's important to be crypto native and then sort of bring the real world expertise into it, because the whole idea is that tokenization theater, what happens after that happens entirely on chain, right? So it's far more important to be like very deep into like on chain tech.
for sure. You mentioned a lot of things there that I want to unpack, but I think an overall arching theme of that, you're talking about building really solid B2B relationships with the right people within the industry to make sure that Theo is able to operate and provide what you guys are saying there. And I know from your background as well, you're a specialist in go-to-market strategies and in business development. I want to know from your own experience, how important is it for early stage founders to be able to make sure that they're creating partnerships that actually move the needle rather than, and see a lot of some founders just, they're out to get any sort of logo that they possibly can, but the dynamics of the partnership isn't actually go beyond an announcement or an article. So how important it is to make sure that you're creating those relationships really early on for the success of the project?
Right. So you mean like personal relationships, or like once you launch your startup to have relationships with kind of potential BD partners?
I think that one leads into the next, right? Your personal relationships, you can tap into your own experience and your own network, and then being able to make sure that you can uh, connect the dots correctly into bringing those people into a B2B relationship so you can take your business to the next level. So how do people go about finding or selecting which businesses to partner with to make sure that there's going to be success?
Yeah, no, so I think in terms of picking the partners, you have to think about what you're building, and it needs to be logical, right? You don't want like what we used to call like a Barney deal. I don't know if it's maybe a dated reference. It's like Barney the purple dinosaur, where it's like "I love you,
Yes, I know.
you love me" song. But that it's just like you issue some kind of a press release. It's completely unclear what the synergies and what they're doing together. It's just like two brands deciding to
Mm,
like do PR together. So
yeah.
it has to make logical sense. So like in our case, for example, partnering with other prop dexes makes a lot of sense because so we're going to build our own prop dex. We have good following, right? So like I go to Asia every 6 weeks, and some of like our AMAs we have like 100,000 views, 50,000 views, so we have like a good brand. But obviously, you want to harness the power of the hive, right? There's many other projects that have a ton of funding, and they have already invested in building their audience. So, uh, and then our expertise is building markets for RWAs,
Mm,
especially perps, right? This perpetual swap market. So a lot of these prop dexes, they're focused on crypto assets, right? So coming to them and saying, hey, we can enable RWAs for you, and they compete either on price or on like having the best tech. But the best way to compete is having assets other people don't have. That's actually
mm-hmm,
how the main reason how Binance took share, right? Binance was not the first, CEX was not the first crypto exchange, but they took massive share
mm,
uh, for many, many reasons. But one of them is that they had assets. They were able to like onboard assets like quite quickly that as other people didn't have. So uh, right now there's an explosion in Perp Dex, TVL, and volume, which is really exciting because perps is like the easiest way to get leverage. Compared to TradFi, perps are just a superior product. Like in TradFi, you have to buy options, you have to think about expiries and strike prices. You buy futures, futures you can get leverage, but then you have to roll. There's like rolling costs. You have to watch it all the time. It's like, unless you're some kind of a full-time trader, they're just not realistic. So
mm.
perps are like really easy to use. So they are exploding, and I think that's here to stay because fundamentally they're a great product, especially for like investors in an earlier stage where it's appropriate to have a higher risk, higher return portfolio. Do we leverage? If you're like 64 years old, approaching retirement, then maybe you shouldn't trade in perps. But so there's still a huge market where it's super appropriate. So there's this explosion in perp decks that happened literally in the last couple of months. And so why not? And so we want to be the blue jeans provider. There's this gold rush, and we want to sell blue jeans to all of them, enable them to compete with each other more effectively by adding RWAs and RWA perps to their arsenal instead of just doing it ourselves. So that's kind of a long-winded answer to your point about partnerships. So think about what you do really well,
Mm.
and then think about the part that's expensive and hard, like customer acquisition. Can you partner with other people that already have customers and you give them your expertise? After business school, actually in business school, when I was still at Harvard, I started a company called Location Labs and moved it to Bay Area. We spent many, many years building it. Ultimately grew to 300 people, and we sold it for a few $100 million. Uh, we were doing this kind of a white label applications for wireless carriers. We very quickly realized that they have hundreds of millions of customers, Verizon's, AT&T's of this world. Why try to build wireless application ourselves? 1 out of 50 consumer apps ever make it, right? We only hear about the ones that make it, but we don't hear about the ones that try to acquire customers and like didn't go viral or didn't succeed. So, figure out what you're really good at and then see who has the assets that you need in order to make it a success.
So you're saying don't reinvent the wheel, figure out how to improve the wheel, and then go and offer that as a service to other people out there and collaborate. Is that how you mentioned that you haven't actually done much in the marketing aspect of things, but you've managed to create these strategic partnerships, which has now led to $150 million of total lock value? And you said you're only just getting started. Is that sort of where it's come from? And I think behind the scenes, if you're partnering with uh, people that have you're providing value intrinsically, right? And then they're able to see that and onboard new people and sort of create that flywheel. Is that sort of the process to bootstrapping a company from 0 to 1 when you don't exist really?
And so you mean bootstrapping like our partners or bootstrapping ourselves? Like how did we get started?
Bootstrapping, yeah, I guess bootstrapping yourself. Let's go into that because I know that Theo has recently successfully fundraised $20 million, and I know that previously, in your experience, fundraising is was it $400 million that you fundraised for a hedge fund? These are big
Yeah.
numbers that you're throwing around, or not throwing around, but are in charge of, right? So it's a lot of pressure that must come associated with these. So how do you go about starting out to fundraise when you're talking to investors? Are the things that you should or shouldn't do? How would you suggest somebody start in their sort of bootstrapping phase?
Yeah, I think so. As far as fundraising, you have to build a track record, whatever it is. If you're fundraising for a hedge fund, then what's your investing track record? If you're fundraising for a startup, then either your previous startup or let's say in your job, right? What did you achieve? If you're a product manager, you launch a product that's either used by 100,000 people or it's used by enterprise and is bringing a certain amount of revenue. So I think the most important thing is to and okay, of course, if you're raising money, especially in the startup world, you typically trying to do something that wasn't exactly done before, because otherwise, why are you like piling into an existing space? So it's always going to be slightly different. But if you can point to things that you've achieved in terms of your track record, then that's the probably the number one building block for fundraising. So
Yeah.
again, in our case, we've done many startups, we've done trading, we've managed funds, raised funds on multiple occasions between me and the founders. So the founders also launched a previous crypto project that reached over a billion in market cap in FDV, and that was actually after the bubble. So they were during the non-bubble time. So there was a lot of track record already. So and then having the right vision, right? So saying, look, we're not going to be yet another tokenization engine, but we're going to pick up where everybody else left off, like kind of like Isaac Newton, like you got to stand on the shoulders of giants. Like, thank you for all the work you did. Now we're going to start filling in the gaps.
I want to know from your experience in the venture capital world, how quickly can you make your mind up when you're sitting there, you open up a pitch deck, how quickly can you make your mind up into thinking, yes, this has potential to be the next unicorn $1 billion company, or like you jump on a meeting? Because I've heard from different things I've watched online that some people who maybe are in your seat where I've seen hundreds, thousands of startups over the years, and you can kind of make your mind up, within the first 5 minutes, 3 minutes, 30 seconds, whatever it might be, whether this is something that you want to explore more or not. So from your point of view, how do you have the first filter, yay or nay, and how long does that actually take you to decide?
Yeah, and that 5 minutes wouldn't even happen, right? So if I was like co-head of the group, that would happen at the level of like analyst associates,
Mhm.
uh, or sometimes without even a meeting, right? So people would send something, and then the analyst is the specialized by area where there's like DeFi gaming infrastructure, right? They know the space. So that kind of a 5 minute rejection would happen even at a low level, right? So
Okay.
like at Polygon Ventures, we looked at thousands of deals over the time that I was there. But I personally looked at maybe hundreds, and then maybe a couple of hundred made it to IC, and then we made like a few dozen investments in that time.
So how does somebody
So so
stand out?
so yeah, so I'd say like I can give some real advice here, like some kind of a juicy or spicy. Is like in crypto, because I was a tech investor for like a long time before I was watching crypto since 2011. But I joined in 23, so relatively recently. But compared to the tech investors outside of crypto, in crypto it's particularly true. It's to some degree true in the tech DC world. There are the VC that are the truffle hunters, and then there are what's the other one? I forgot. I forgot the analogy that I use. So basically, there are VCs that try to find this diamond in the rough, right? So they would meet with 1,000 companies, and then this one like really obscure startup that got rejected by everybody, and they'll say, you know what, they got something, let's do that deal. Oh, and then no, the other type is the heat-seeking missile, right? The other ones, they figure out where the heat is, and then they try to speed their way in there to basically get an allocation into the deal. And the vast majority of VCs are in the second category. So like the real
Mm-hmm.
spicy advice to the founders and figure out who are the VCs that are in the first category. And you only need one, because once you have secured your lead, then you go to all the heat-seeking VCs, and then pretty quickly you can get another 15, 20 people for your ride. Because in crypto, unlike in traditional VC, people are very happy to do this like large club deals, because
Mm-hmm.
like the more brand names, the better. In traditional VC, just because there's so much capital that's flown into the space, that typically the leads, they want to take the entire deal for themselves, so they don't really allow co-investors. But in the case of crypto, it's like easy to do. So figure out if the VC is like the heat-seeking missile type of VC, and you don't have the heat, right? So then you save your time and try to either generate the heat or find the investors that are actually willing to sit down and spend the time, right?
Got to do
Because
your
if
due
you're
diligence.
if you're not a known, if you're not like a hot startup yet, right? It's impossible to convince anybody, even like the truffle hunter, in 5 minutes that you've got something cool.
Mm,
So,
definitely.
so, so, so yeah, I would say really, yeah, really focus on getting the lead, and focus on a small number of people that are willing to take those like early stage bets. And it
For
may be
sure.
smaller funds. It may not be like the household name fund, because if you have a giant fund, right, it's not scalable to talk to 1,000 companies and then invest in one, right? They're never going to like, go through their fund. So those fund by necessity, they want to see already some evidence of traction. Now, once you have traction, once you have metrics, then of course you sell those. Then you can approach everybody. I think your question was is how do you get that really 0 to 1, like the early stage, where maybe you have nothing but an idea, you don't have customers or partnerships, and you need that seed stage funding in order to build your MVP and like start getting the early traction.
Yeah, I think finding true users and finding that traction earlier on is a good signal that you have found some product market fit. And then you need to get the funding or the collaboration to take that to the next level as well, which I think the lead investor plays a big role in, especially in the venture side on crypto. I've never heard of the analogy of the heat seeking missile, but you do see it when, one good name on your cap table, and then everybody else hypes him because there's a top VC on there. So, but getting that one name is, I think, that's the difficulties that a lot of people face. It's just a little bit of a closed sector to tap into if you're especially new into it. So I know that throughout your previous history and everything, I want to know, like, you've been constantly making really important, very financially stressful, potentially decisions around uh, hedge funds, moving into different ventures as a founder, as a VC, as a manager, wealth manager. Does it ever get easier for you to make a decision when you're dealing with multi-millions, billions, $1 trillion? Is like there's some internal pressure that you have just normalized over your experience within the financial markets, or does every single decision still weigh, keep you up at nighttime?
Yeah, no, that's okay. That's interesting. So it's different in when you're building a startup or private assets like VC, private equity, compared to hedge funds or prop trading, right? Especially say when I was running the fundamental prop trading group at Credit Suisse, and I had over $1 billion book across Asia and US, and it was also really volatile time in the market. So things were moving like crazy. And also there's like many eyes, because in a hedge fund, it's like somewhat private what you do. But in prop trading, you have, hundreds of people within the bank, risk managers, accountants, and all that. That all know every trade, every move. They all know your P&L. So there's definitely a lot of pressure there, and it changes every second. So the beauty of the hedge fund business is that the market is constantly giving you feedback, right? So that's kind of a charge. Whereas in the VC world, you invest and then you have to spend a few years building. I would say the main advice, right? So the pressure is infinitely higher on the prop trading hedge fund side, right? So the key thing there is not to think about how that affects your net worth, right? Because let's say if you have, whatever, $10 million invested in your own hedge fund, and then you're getting 20%, right? And suddenly you have a negative $100 million P&L. You're like, oh my God, right? I just personally lost. Well, I mean, obviously there's team and like they're different partners and whatever, but I just personally lost $10 million or whatever. I lost $5 million. And I lost like whatever, 5% of my savings. So if you think like that, you're never going to invest properly. You're just going to panic. You're going to sell your best ideas early. You're going to cover your shorts way too early. So the key thing is you have to focus on the analytics, focus on the data, focus on the work, your training, your experience, and not worry about, you know, basically making money, ironically, right? You have to, the people that make money, they focus on building and do good work, building in case of startups, doing good work in the case of investors, meeting more companies, doing better analysis. If you focus on doing good work, then money comes. So and this is this kind of the irony of it. If you obsess about money, you're never going to make any. And obviously for builders, that applies like 1,000x, right? If you watching your token price, and in the crypto startups, it's a little bit hedge fund like, right? Because companies have essentially a publicly listed instrument a lot earlier. Right now, OpenAI is finally going public at $1 trillion valuation, and it was private until then, right? So, if you're building in a private market, you have that, window. But in crypto, relatively early stage companies already have a list of tokens, and these are like super volatile. Essentially, you're trading stocks. I mean, the tokens are not stocks, but you're trading some kind of a representation of a success of this given protocol, and they're trading like crazy. So it's actually much harder to stay focused on building and to preserve credibility with external parties, because if you're doing a business deal, they're like, oh, but look at your token. You have to sort of be fully confident yourself in order to inspire confidence in others.
Absolutely. And to bring it back around to like the data decisions that you are very much a fundamentalist on, I know that you are looking at the Asia market, particularly in the Korean market. When I went on to Theo Network, it was one of the first times that I've actually seen a whole entire news announcement that was translated into, I think it was either Korean or Chinese. I'm not too sure. I couldn't actually understand it. But and then I noticed that you've been yourself have been tapping into AMAs and talking to the Korean community, and also had an activation there at Korean Blockchain Week. What is the attraction that you can see there in Korea? As I know that you're a strong go-to-market strategist, so why have you decided to tackle into the Korean marketplace?
Yeah, so Korea has a very well developed adoption of crypto. I mean, there's multiple surveys, but by some measures, it's like up to half of adults in Korea have a crypto wallet and have some either actively trade or have investments in crypto. Uh, they they've had a very they don't have like formal regulation, interestingly enough, formal legislation, but they had a very light regulatory touch for like a bunch of historical reasons. So especially in the environment at the time when US was like very, very anti-crypto. So you had, a place like Korea that were like a place where you can test things. And Korea in general, right? So it's like it went from being like a poor country to being a rich country in one generation. So it experiences like massive growth by being an early adopter of a lot of things, by being willing to experiment. So my company Location Labs, like many years ago, my first customer was actually SK Telecom, which is the biggest wireless carrier in Korea. And once I established the credibility there, I went back to the US. So that's when I signed up originally Sprint at the time, and then later T-Mobile and Bell Canada, Verizon, the bigger carriers. So I found like over decades that Korean market is like much more open to new technologies, much more willing to experiment, and they've benefited from it. But if you go to Korea, right, you could argue like Samsung phones, with the folding screen, they're like much earlier the earlier, if you remember way back with a large format phone and tablets. So you just they benefited greatly from being more willing to experiment. So, but we're going to do the same thing. So I've been going to Korea like regularly. We
Mm-hmm.
also have our product team. We have several people at Theo on the ground in Korea, but we're going to do this with other countries too. There's other places that have massive adoption of crypto, especially in case of Korea, didn't have hyperinflation, but some of the emerging markets that have really high inflation, or the kind of canonical examples like Argentina and Turkey, but there's many others. So we are going to sort of systematically add other countries and build education and our presence there, similar to Korea. Again, in Korea, for example, it's not easy to buy gold, right? So a lot of these countries, and Korea is like it's not a EM, but it's not quite DM yet, so it's sort of in between. But it's definitely part of that 7 billion people. They don't have easy access to like good investment products, and we can provide it on chain. The beauty of on chain, you don't have to like get a broker dealer license in 200 different countries, right? That would take like a century, literally, to do. Whereas the blockchain is the same in every country, so it's a
Mm.
natural technology to give people access.
So, in the talking of giving people access, now that America has become a little bit more crypto friendly, and do you think that it has, if they continue to be crypto friendly nation, do you think that America has potential to become a crypto mothership, or they're very much, they make the policies and they make the moves, and a lot of the world tend to follow what America do. They sort of set the standards, set the trend. So now that they're becoming a little bit more bullish and a little bit more crypto friendly, do you think that we're going to see a lot more Western markets, even the emerging markets, sort of becoming more crypto friendly and being more aware and bringing stable coins in, and opening up this access to, I guess, the global financial markets worldwide?
Yeah, so I've talked to a lot of this, like the regulators and even like Congress people in various countries. Uh, Many of them are going to follow directly the U.S. It's like basically they're going to let the U.S. formulate the rules. They're going to copy and paste them into their own. There's like a few other areas. I think EU, you just always like they love like Brussels. They love to regulate stuff. So I don't think, interestingly enough, like because US was like so anti-crypto that EU had a few
Mm-hmm.
sandboxes that you could play with. But now it's sort of, I think, an afterthought, considering it in the US, you don't just have sandboxes, you actually have a full-on permission. So many countries are going to directly copy paste the US. They're just waiting for the US to formulate the policy. And then so in the US anti-crypto era, you had this oasis, like they had kind of a Dubai, Singapore, a couple of other smaller things that had different sandboxes or kind of like duty-free zones or whatever. So I think that's also good and be useful for experimentation. But US is, as far as the development, is going to be the number one place by far. So I used to advise our portfolio companies a year ago, 2 years ago, for the principals to get out of the US for 6 months out of a year for all the crypto founders, just for obvious reasons. Now we're
Mm-hmm.
advising them get back to the US as fast as you can. I mean, like half of the lofts in Soho are now getting rented to like crypto projects, because not only they want to go back to the US, they want to have physical space, like right here in New
Mm.
York City, just to prove that they're serious about the US. And there is like at least a 3-year window to build that. And I think if various protocols build enough value, like I think we're providing real value to people, right? So in my time in Polygon, we're investing in infrastructure a lot, and that's kind of a hard to explain. It's like, oh, here's another L1, another L2, another data availability project. It's like, what's all that for? But now it's clear, right? So the throughput of blockchains compared to just 5 years ago, right, is 100,000 times faster. So
Yeah.
now we're entering the application era. So you need to
Yeah.
have real applications, real revenue, provide real utility to users using the infrastructure that's already in place. And
I
that's
couldn't
the
agree more. That's why like, finally the technology is here. It's fast enough to actually compete, And now we just need projects like Theo that are just making that accessibility, and also the education, I think, is a bit of a hindrance that we need to overcome in the industry. We need to educate people that crypto isn't just for the Lambos or just for the scams, to actually people coming and using, say, a Theo Network platform there, and they don't even know what's happening behind the scenes. They don't even care that it's running on blockchain technology. They don't even, just the fact that it works is better. It gives them value. I think that's the stage that I'm really excited for right now. And I feel like that we are just starting to build sort of the applications and create these new resources or platforms that people can actually come in and benefit. Because I think when I was a while ago, again, I was looking at what does it take to actually compete with a traditional app in this space? You know, why should I go from, say, using Robinhood to, say, using Theo Network in the future? Like, have why should I change? Because I'm familiar with something, it's providing me value. So when you think about companies that are coming in the Web3 space, whether it's a game or a financial app or whatever it might be, you need to provide that extra value and make it easy. Like, you need to compete against something that they're already familiar with using. And to do that, it's adding that extra value, giving back to them for integrating or using or rewarding them, or just providing a better experience. So I think that's really exciting right now, is that people are starting to bring it back to, okay, what value can we give to our clients or our users that's better than what they're currently using. And I think that blockchain technology is fundamentally, it's better payment systems, but also people don't really know about that. So, and trying to educate people to change a habit is very big task.
Yeah, well,
So
I mean, in
I'm
the case where they don't have access, yeah, so better payment, also better investing system, right? So like our vision in the long run is to have somebody, right, in Thailand where you're at now, with like $100, have a properly diversified portfolio on chain that has commodity stocks, risk-free rate, has as bond, maybe a little bit of private assets in the future. So they cannot get anywhere else, right? So there's no like switching involved. It's like either you don't invest at all, you don't build wealth, your kids don't go to college, or you do it. And the only way to do it on chain, because there you can start with $1 or less minimum,
Mm,
with no unnecessary paperwork. It's kind of a personal story for me. So my grandparents in Moscow in the early post-Soviet era, they lost their entire life savings because of the very famous bank fraud. It was like the biggest bank fraud in Russia, in Russian history. And they were, my grandfather was a professor of physics. My grandmother was a very prominent doctor. So they were not turnip farmers. There was like a lot of really smart people got caught in there. They invested in this bank, but there was no transparency. The bank had all this like illustrious investors and management, had a really like strong brand, turn out to be a fraud. So in crypto, you are your own bank. You don't have to trust
mm,
any sort of like shiny person, right? So don't forget, FTX was a centralized exchange. It was the same exact story. You had the shiny person, SBF. You hang out with politicians, everybody believed him, and it turned out to be a fraud. When you're on chain, right? So you say compared to like Robinhood and Coinbase. That's why Robinhood, Coinbase, they're really smart. Binance, the same. They all have also decentralized finance operation. They have they spun up chains and L1s and L2s, and they have sort of DEXs that they're supporting. So they're definitely diversifying very rapidly into on-chain. In on-chain, you are your own bank. You can always go there and check that your money is there. It's not dependent on anybody. And especially when you're in like some of these, less stable countries, you shouldn't trust the bank, right? Because maybe the bank is corrupt. Maybe it's like getting bribes. Maybe it just is over leveraged, and you have no idea what's going on. When I was at
yeah,
at
but
at the Credit Suisse, right?
then you need to
Sorry, go
tell
ahead.
people this. Like,
I
people
said
don't
again.
know this. That's like the thing. I say, like, people don't know this. Like, people just intrinsically trust the bank, or intrinsically believe that this is the case. They don't know that there's other options. So I think, like, is there a part of your strategy to educate these emerging markets around what you guys there can offer as an alternative?
Sorry, I couldn't hear us breaking up a bit.
Oh, I just said, is
Oh,
there The idea behind people having control of their own finances and able to um, actually have full access to this and unlock that potential. Uh, how is this message going to be told to people, say in Thailand? Like, how is Theo going to tell people in Thailand that with just $1, you can start to save, you can start to earn, you can unlock new opportunities that could change your future, right? And you've actually got full control of it. You're not going to be risking of a bank closing or somebody running away with your assets. There's like you control everything. Is there like some sort of strategy that you are employing yourself with your strong go to market background? Like, how do you tap into these markets to educate them that you guys exist, that you guys are the people to be able to do this for them?
Yeah, so we obviously have some of our own brand, and it is going to increase over time. We're going to have our own decks with the HIP3 and Hyperliquid, and we'll have our own customers. But that's the idea of partnering with people that already have customers, right? So clearly, we, as a single company, are not going to market to 7 billion people, directly. We're not going to become the Meta, right, which has 5 billion users, 5 billion like monthly active users or something. But partnering with Perp dexes is something on our roadmap that I mentioned before. In the medium
Yeah.
term, partnering with centralized exchanges is not out of the place. So what we do is we take the RWAs, we build markets for them, we market make, we bring in external market makers, we ensure liquidity, ensure composability. We don't necessarily also have to have the last piece, which is the customer acquisition, or like the early piece, which is the tokenization, right? So for those part, the tokenization is like somewhat commoditized in my view, and then the customer acquisition is the ultimate non-commodity piece, but there is a lot of people already have a ton of customers. So partnering
Mm-hmm.
with DEXs, partnering with CEXs, partnering with fintechs is something we're doing as well. So there are like kind of Web 2 companies that allow people to invest online, and some of them are all crypto, some of them have a crypto element. So bringing RWAs to those fintechs, especially primarily the fintechs that are based outside of the US, right? There's no value to bring RWAs to Coinbase or Robinhood because they already have them. Robinhood already has them. Coinbase can easily add trading stocks, right? I mean, they're a big company, right? Somebody that's based in the US is not the primary customer because they have relatively easy access to things. Right? But outside the US, some of those fintechs they don't have easy access. So we can give them that access. And again, for in the early days, it's also going to be rewarded with Theo points, which, as I mentioned before, the marketplace objectively values them at a pretty decent level, considering that our point rewards are valued at 15.6, right, minus 3.8. That's your the 12% is the value of the rewards that we're giving to like THBill holders right now. So that's kind of the beauty of just the reason why this makes sense is the beauty of Web3 is it helps solve the cold start problem, right? Your question is how do you get people in Thailand to be aware of your product for them to use it
Mm.
because they've never had something like that before. So in Web 2, there's really no way. You have to like raise lots of money and do your like SEM, SEO or whatever. In the case of Web 3, you can reward people with token early on, right? So the early drivers for Uber, the early users of Uber got nothing for it. And yet they were the most important entity, the most important parties to ensure Uber's success, not the VCs, and to some degree, not even the builders of the app.
Yeah.
Anybody can build an app like that. There's been like attempts throughout the years. So rewarding your early users, I think, is a super legitimate use of Web3 and create from. Obviously, there's like abuses, right? Because once you have a token out, then people are gonna speculate it as well. But I think fundamentally there is value in there to kind of enable that cold start. So partnering with people, but also offering rewards to the early users. Once you have the early users, then they tell their friend, they tell their cousin, and then they see the results, they see the returns, and then from there you have a more organic customer acquisition.
Yeah, that's absolutely true. It's crazy to think when those big companies, say like Uber, and without the drivers, Uber is nothing. And the Ubers, I guess, yeah, they were providing them an opportunity to create value, but they weren't actually rewarded or thanked for being the grassroots of the business, and still are the grassroots of the business today, right? Without the drivers, or maybe actually with Waymo, who knows? We might not need Uber drivers anymore, but I think that's a
Well, you're
whole
still
different
going to
kettle
need
of fish to.
riders. Yeah, I mean, there are like people
Pardon?
starting ride sharing apps, especially like in like Southeast Asia. Actually, there's like a lot of other ride sharing apps that have like somewhat meaningful market share. Um, so people are trying. I mean, I had a close friend that in the early days of Uber, he saw this and he was trying to build a rideshare system where the early drivers would get equity in the company, because that was really before crypto tokens came into their own, before you had fast blockchains and smart contracts, and like quick settlement times. So the only way I could do it was through equity. And it was just like a huge mess because people didn't understand equity. They don't understand like when can I sell it? I have to wait 10 years, 20 years before you go public. And there's like all kinds of sort of paperwork, things they have to do. It was a fundamentally great idea to share the value, but you couldn't do it outside of the crypto of the well, what we call crypto, but like for the rest of the world, it would be blockchain, right? So
Yeah,
the
for sure.
blockchain is the only tech that allows you to do that early stage value sharing. I mean, if that existed at the time, my friend's company would have been successful.
About to be as a right time, right people, right place, right time. I think is a combination that, yeah, I guess, yeah, having that combination is, yeah, like when you have a project that is at the wrong time but the right people and the right tech, it's just you need those three things to come together to be very successful. So I guess just before we want to close out, I gotta say, for you, where do you hope to see Theo in the next 3 years? If you are saying that right now you have the right team behind you, you have the right technology behind you, and right now it seems to be the right time for the market to be capturing this wave. So, with all this
Yeah,
going ahead, where do you expect to see Theo? 3-5 years from now.
yeah. So our real North Star is revenue. So like I said, it also fits in my overall vision as a crypto VC. It's sort of great that we have all this infrastructure. Let's build application that people actually use, and not only use, that it creates enough value for them that they'll pay something for it. So in our like internal model, after 3 years, we have a few hundred million of on-chain fees, of on-chain fees, and then it's to be determined in the future, like what percent of them will go to revenue. Right now, we most likely will use that those fees to like buy back token as opposed to like distributed dividends. So we like the Hyperliquid model, like I mentioned before. I mean, they got a lot of things right. And the way we would drive that revenue is by having lots of volume, having really exciting, high quality RWAs, partnering with the right global institutions, bringing really high quality stuff, and then really working hard to connect them with places on chain where liquidity lives. Right now you talked about right place, right time. Part of the reason the timing is right now is you have this explosion in perp dex volume. So the really
Mm.
key wedge for us is like our expertise in perps, the perpetual swaps on chain. So launching the spot and the perp market at the same time, and then having the synergistic liquidity between them is one of the key unlocks to bring this liquidity, to bring the real trading to RWAs. So in 3 years, we hope to have lots of volume, and then resulting in a few hundred million of revenue that will justify the proper valuation for the company. And then for me personally, I'm excited about having a wide selection of high quality only RWAs on chain that are all liquid, that are all quality, so then people around the world can have the same proper diversified portfolio that I can have, like I said, with my overpriced private banker, right? So it's like not just
I think
democratizing the trading, but democratizing the investing, allowing people to build wealth.
That's very exciting for you. And I mean, to be able to bring all of your expertise and knowledge in financial markets, and actually now I can see that you're absolutely like really keen to actually unlock this accessibility to everybody because from hearing your stories and looking at your previous experience, you've done so many successful ventures across the financial markets, and now like you're solving a real problem that it appears to be true to your heart, that you actually want to allow people just across the world start with 1 cent, $1, and get access to a world that they've been unlocked or not being able to access, and now you're building something that can change people's lives in many different ways. So last question to you is, have you got any messages that you would say to your younger 17-year-old self before he knew that he was going to embark on such a massive journey back in the day?
Um, I'd say it's an interesting question. So I was actually, I mean, I've seen that question asked to other people, and they're always like, "Oh, my 17-year-old self was like so uncertain, like worried about the future, da da da." I would tell them that everything is gonna be all right. But the funny thing is, like, I was actually like completely unstoppable when I was 17. I'm like much more chill now, right? So I do love the vision of bringing giving the world access to U.S. financial market. That's something I'm excited to work on for the next 20 years, for the rest of my career. So I have a lot of passion. I'm happy to work on it. But when I was 17, I was still in Russia, and I figured out, and actually 16, 17, I figured out how to get a passport. I was going to this school where I had to sign papers that I won't leave because I was studying theoretical physics, and there was KGB on campus, and they were like instilling fear in you. So I signed the paper. I couldn't even wasn't even allowed to go to embassies, and I went to the embassies anyway. Figured out a way to get a ticket, and basically violated this like papers that I signed with the local KGB. Went to Canada. I didn't have any friends or family, and sort of started to figure out how to stay, and didn't have any school at the time. There wasn't information available like there is now. Whereas you come here at 17, you already like know all the lingo. You have Instagram. You know how to play. Schools have all kinds of programs that help you. So I don't know. Like the first year I spent like loading trucks in the warehouse and selling encyclopedias. That's like after studying theoretical physics. So I had no idea if I'll be successful, especially like was loading trucks at night. But I don't know if I would have done anything different. So there's not like concrete advice that I would give, but it's always good to go back and say, hey, yeah, I mean, everything will be all right. Probably not. Probably not. But I'd rather have the 17-year-old come here now and kick my ass, so I'll work harder.
Wow, what a inspiring story that you've got there too. You said you've tried many different things, and I think also when you're young, you don't really know what you want to do. I mean, I've tried many different professional careers throughout my path, and they've been very much the term pivoting, where you go from real estate into engineering, into now I'm into venture capital, and now also podcasting as well. I think it's the story of follow your nose, follow your passion, and then the other things do flow. And I think that if you can surround yourself with the right people, have the right conversations, and start to share your ideas and be more confident in that, you just sort of naturally create your own path towards success, whether that's more time, more money, more happiness, or whatever your image of success looks like. I think that just yeah, don't give up. Keep following your nose, and I mean, yeah, who knows where you'll be ending up, and reflecting on your 17-year-old self.
Yeah, what you did actually makes a
But
lot of
yeah.
sense, right? People talk about skill stacking the different skills. So it's actually each
Mhm.
pivot is not a waste because you're bringing it all together, right? The podcasting is a skill you can apply to anything. Engineering, right? That's analytical thinking. That's super helpful when you're a VC, when you're in crypto. So I knew I wasn't going to do theoretical physics forever. I loved it because figuring out how it's so weird how the world actually works, like at either like super
Mm.
small or super big level, which is kind of like what physics studies. So it was like it's really interesting, but I knew I wasn't going to do it forever because it's sort of an obscure thing. You're stuck university somewhere, but I didn't know specifically what I was going to do. But like the first principles thinking, like Elon Musk talks a lot about it. He studied physics as well, also in Canada, by the way. So it's like literally stepping back and forgetting what's there now and trying to. That's why I was able. Hey, I'm going to have a rocket that can actually come back instead of like self-destruct. So this first principles thinking is a lot of people talk about it, but unless you actually studied physics and like maybe pure math, you don't really understand what that means. It's like when you literally rederive really quickly. Let's say if I forget Maxwell's equations, I can just quickly derive them, like in the context of like an exam or something. So anyway, so it's like stacking different skills. At the end of the day, you end up like using all of these things, right? So especially when you're working with
Absolutely.
stuff. So like, yeah, I'm not using like hard math or physics now, but you know, crypto is like intellectually very interesting. So it's still like everything. I guess advice maybe to my 17-year-old or like any 17-year-old out there is like, don't worry about pivoting because each of your experiences is going to be part of your skill stack. And like in the age of AI, you're not going to be successful by being a narrow specialist because you already have even like the general like LLMs can do narrow stock preview, but now like basically like recent 6 months, the specialized LLMs like really excelling at like specific tasks. So the humans are going to be competitive by bringing different skills together.
Yeah, dream big, think big, and then also having the skills or learning the skills to be able to uh, make those dreams come to life, I think is very exciting. I'm also very excited about AI and learning all of these new skills. I can't get enough of it. So, but yeah, I want to say thank you so much for talking with me today. It's been really cool to dive deep in my own research, learning about Theo. You guys are really solving something that I think would be I would want to come and join or like be part of your early ecosystem. So, and me feeling that excitement that I did when I realized what you guys are actually doing and solving, it was easy for me to understand, which I think is a first massive tick in the right direction. And it's also something that I want to get more involved in. So I think that what you're solving is providing true value to not just the ultra rich or the Lambo crypto bros. You're providing opportunity to people all around the world, bringing it back down to the fundamentals of what blockchain is as that financial payment system and equalizing opportunity. So I'm very excited to see where Theo goes. So for anybody listening, I know that your tokenized T-bills are already live. How can they get involved? How can they follow along on with you, your journey, and make sure that they don't miss anything coming up with the Theo Network?
Yeah, so we have, right. So US investors cannot access our products for now. I mean, they're, you know, hopefully in the future when there's more regulatory clarity. But outside the US, you can buy Theo in like many DeFi protocols from like Uniswap and on. You know, not by Theo, by Theo's RWAs like THBL and the future ones. And then just for to like learning about Perps and RWAs, we have Theo Network is our Twitter handle, and my handle is Iggy Iope in one word. So we have like good content there, and we're going to be putting out more as we have a more complete portfolio of assets.
Well, there you
And
go. Very easy.
Theo.xyz has
And
also
yeah,
technical docs.
Theo the XYZ for technical docs. So thank you
Theo.xyz,
so
you'll
much.
find a lot there.
Okay, sounds good. And awesome. So anything else that you want to, any passing last words to anybody or anything or anybody that you want to say? Otherwise, we will come wrap it up there.
No, thank you so much. It was really interesting questions. I think we, you know, like you know, you're a systems thinker too, so you like to figure out how all that fits into like your broader picture around, you know, of like the world and how it works. It was super interesting for me, and actually it gave me some thoughts too about how to uh, how to position the product and what to build next.
Yeah, I've got many more questions that I would love to ask, and I'm sure we can get you back on at another stage. But like I said, what you're
We'll come
doing
back for
actually
part
really
two.
makes sense. I'm really excited. Well, thank you so much for your time today, Iggy. It's been a pleasure.
That sounds great. We'll talk soon.